Welcome to G2 Weekly Market Update, where we break down the key movements shaping global markets, from shifting trends in the United States economy to policy signals from Europe, Japan, and China. Here is what mattered this week and what investors should be watching next. United States. US equities moved lower this week, pressured by renewed concerns over artificial intelligence disruption across industries. The Nasdaq Composite fell 2.10%, while the S&P 500 and Dow Jones Industrial Average declined 1.39% and 1.23%, respectively. Mid-cap stocks held up relatively better, though still negative. Notably, value stocks outperformed growth for the seventh consecutive week, extending their year-to-date lead significantly. On the economy front, January delivered a strong upside surprise in hiring. Employers added 130,000 jobs, the largest monthly gain in over a year, while the unemployment rate dipped to 4.3%. However, sharp downward revisions to prior year's job growth tempered some optimism. The stronger labor data reduced expectations for near-term Federal Reserve rate cuts, with markets now pricing a higher probability of rates staying unchanged through mid-year. Inflation data showed encouraging signs. Headline CPI rose 0.2% month over month and 2.4% year over year, both easing from December levels, helped by lower energy prices. Core inflation edged slightly higher to 0.3% for the month. Meanwhile, retail sales were flat in December, falling short of expectations and suggesting softer consumer momentum. In fixed income markets, US Treasuries gained as yields declined, with the 10-year yield reaching a fresh year-to-date low amid equity market volatility. Investment grade credit delivered positive returns but trailed treasuries, while high yield bonds remained relatively resilient. Europe. European markets were volatile but broadly steady, with the Stoxx Europe 600 finishing marginally higher after touching a new high earlier in the week. Investors reacted to stronger US jobs data while also monitoring AI related concerns spreading globally. The Eurozone economy expanded 0.3% in the fourth quarter, translating to 1.5% annual growth. Spain led regional growth while Germany showed mixed signals. Employment across the euro area rose more than expected, though France's unemployment rate climbed to 7.9%, with youth unemployment remaining elevated. Germany reported higher wholesale prices driven by metals and food cost. In the UK, political uncertainty weighed on sentiment, but economic data showed modest growth, with GDP rising 0.1% in the fourth quarter and retail sales strengthening year over year. Japan. Japanese markets surged following the February 8 lower house election, where Prime Minister Sanae Takaichi's Liberal Democratic Party secured a supermajority. The Nikkei 225 jumped nearly 5%, reflecting strong investor confidence in the government's fiscal expansion agenda, including investment initiatives and potential defense spending increases. Bond yields initially rose but settled broadly unchanged as fiscal concerns eased following clarification on funding plans for proposed tax measures. The yen strengthened sharply to around 153 against the US dollar after renewed verbal intervention from Japanese authorities. On the economic front, real wages declined slightly year over year in December, highlighting ongoing pressure from inflation despite nominal wage growth. China. Chinese equities ended modestly higher ahead of Lunar New Year holidays. Mainland markets will close mid-February, with trading resuming later in the month. Inflation data showed continued softness. Consumer prices rose just 0.2% year over year, while producer prices remained in deflation for the 40th consecutive month, though the pace of decline slowed. Persistent deflationary pressure underscores the need for further stimulus. There were tentative signs of stabilization in the property market, with declines in second-hand home prices slowing. The People's Bank of China reiterated its commitment to a moderately loose monetary policy stance in 2026, signaling room for additional rate cuts and liquidity support. G2 takeaway. This week highlighted diverging forces across global markets. In the United States, stronger labor data reduced expectations for rate cuts even as inflation cooled and retail spending softened. Europe continues to show steady expansion. Japan enters a new phase of fiscal ambition following a decisive election result, and China remains focused on policy easing amid lingering deflationary pressures. Markets remain highly sensitive to growth signals, policy direction, and structural themes such as AI disruption. As volatility persists, sector rotation and data dependency are likely to remain key drivers in the weeks ahead. Thank you for watching G2's weekly market update. Stay informed and stay strategic. We'll see you next week with more insights on global markets and macro trends from G2. Thank you.